Absolutely flat and quiet. I'll just quickly revisit Vedanta to see.
Still down 2%.
Oh, the selling's only increasing. 2.5% now down. So the market is a little wary about the kind of contours this value unlocking is going to take, and whether that Zinc International gets sort of merged with Hindustan Zinc and what happens from there on. So I guess that's how it is. On the index, extremely flat. You have some names like ITC, SBI holding up the large end. ICICI Bank is pretty stable. So these are the big boys that are providing some stability. Autos are in for a correction after a great ride this week. M&M, Maruti, Hero Moto, Bajaj Auto, all of the autos are down. Profit taking ahead of the long weekend is playing out. And everything else is sort of in between. So very quiet, I think, to begin the day.
Yeah, but I think the first dip has been bought. And therefore, now we have green on the indexes. Mid-caps are now up almost 0.25%. And Bank Nifty is up 0.33%. SBI is doing a bit of the lifting. But, across the board, practically all banks are in the green. Barring Axis, which is mildly in the red, I think it's entirely a green set. Now it's 0.4% up on the Nifty banks. So the banks are probably being favored after getting some royal bashing in the earlier part of the correction. Also, I guess it's interesting to note that ahead of the long weekend, McDowell's and Zomato are trading the highest. McDowell's up 5% and Zomato up 2.5%. Mitesh, any trade on the index? The first dip has been bought. Okay, we're not very lucky with audio, so Mitesh can't hear us. Any other interesting aside, Sonia?
A couple of stocks actually. I just wanted to point out, you spoke about McDowell's holding Zomato, Devyani International as well. I think people all set to eat more junk food during the holidays of the 3-day weekend coming up, and United Spirits as well, up almost about 1.5%.
Paint companies having a good session today. The continued impact of lower crude and the fact that they've taken such aggressive price hikes. The market likes the look and feel of that. Asian Paints is, of course, cooling out. Look at Kansai, Berger. These are stocks that are starting the day on a pretty optimistic note. So that is the market for you, at least as of now. Let's take the conversation forward. Venugopal Garre, Managing Director at Bernstein, is with us for a view now. Venugopal, thanks for joining in. Good morning to you. So it's an interesting patch that we find ourselves in, a bit of consolidation after a blitzkrieg, literally, rocket drive up. How do you look at all the factors at play right now? Are we evenly balanced? So basically a pause and then the rally resumes? Or do you actually see downside risks?
Thanks a lot. I would probably say that, in terms of a context, this thought process around market peaking from an index point of view was something that we had assumed should happen 2 or 3 months back. So it's actually still run up since then. So we are actually moved to a neutralish view in the market, despite keeping a broadly positive view on the macro cycle in terms of direction for the economy. And the reason simply was that we felt that valuations across the board was rich because there was a broad-based rally across sectors and stocks. And hence, it was very difficult to expect directionally to make a lot of money in equities. Now, that viewpoint per se holds. Now, incrementally, if at all, over the last 2 or 3 months, perhaps valuations have gone up more. And secondly, in terms of data points on macro, we are still in a situation where the data points are mixed, so it's not necessarily anything incrementally positive or incrementally negative. So this is where it stands. So for us, the stance hasn't changed, which primarily means that we would still take it as a neutralish opinion. What it means is we're not really calling for a big correction as yet, but directionally how things might pan out is this consolidation phase could last for a slightly longer period of time, before which we start to see the next upward resumption in terms of a move.
Venugopal, hi, good morning, and thanks for joining us. The big story in the next, I think, half an hour will be the listing of Paytm. And it's interesting, right? I mean, here is a company that is posting losses year after year, but look at the valuations that they're sitting on. So it's expected to be a tepid one, but largely, how are you positioned in these new age listings? Anything for long-term investors?
Yeah, that's a very pertinent question at this juncture, because this listing spree is not going to stop. Right? So you're going to see that intensify over the next 2 or 3 years. So the way we sort of look at a lot of these companies coming in is that, firstly, from a top-down perspective, we are positive on the overall digital opportunity, because clearly we see this something as the next 10, 20-year future for India. And from a perspective of market itself, we are actually saying that the entire digital listings, the relevant ones, would perhaps account for more than 20% of the market a decade later. So that's the importance of these digital listings. But having said that, the way we are looking at approaching, individually on a case-by-case companies is primarily looking at businesses where we believe they have a strong market positioning within their respective sector, and we don't really see too much of competitive risk sort of impairing that opportunity. So what it primarily means is that in each of the end markets that you're going to see develop over a period of time, it could be in e-commerce or in e-commerce logistics or in edutech or hospitality, there'll be perhaps one or two at best players who are going to disproportionately scale up even post the listing over the next decade. So that is the choice that one has to make. But at the same time, what it means is there'll be probably 80% of the opportunities that you get over the next 2 or 3 years are primarily opportunities being taken by corporates to just offload, or to gain, from the market strength that we are seeing for such opportunities. So we have to be very careful about what we get in and what we don't get in. So that's a broader script I would highlight, but we clearly know who the top leaders are with positions which are difficult to dislodge.
Okay. Point taken. Now can we discuss this very interesting report you have written, Venugopal, on the emerging digital economy and what it means for the equity markets. You go on to say that it is likely to dominate equity indexes, the digital economy, and you are also exploring the potential of a new FANG in India, or a FANG of India. Can you elaborate this? I mean, where do you see it dominating, and would the FANG stocks be the ones that are already with us, the Nykas and the Zomatos?
Yeah, so we somehow felt that given the kind of listings happening in the market, India's own digital economy really needed a digital identity, which is what you relate to. But at the same time, we were of the view that it is possible that when we coin a certain word, which we called as powers, could of course change over a period of time where there could be certain additions or certain deletions, right? That's a caveat there. But the perspective primarily for us, when we sort of looked at, looking at trying to coin this sort of a term, is to look at the leaders in quite a few of these spaces and pull them across as those leaders which could probably sustain in terms of positioning over a period of time. So that's what it was. So unfortunately in this, Nykaa is missing because it's not a part of our, but, very clearly that's a business which, on its own has merits.
Okay. Venugopal, I'll just, the word you said wasn't very clear, so I'm just explaining it to viewers who must have missed it. Like FANG or FANG, the acronym which Venugopal has coined or Bernstein has coined is powers. So it's P for Paytm, O for Ola, F for Flipkart, they have it as e-commerce. And then you have the digital arms of Reliance and Zomato and Swiggy and EdTech, Byju's. So that's your powers, is it?
That's right. And by the way, W represents Flipkart because that's Walmart, right? So,
yeah. That's why W. Yeah. Got it.
Okay. Venugopal, the other debate that I think we've all been having, that the entire commodity side of the market has really helped lift earnings as well as, of course, the market trajectory. These stocks have done very, very well. Now, which camp are you in? Do you think that whether it's metals or oil and gas, they'll continue to be a driving force? Or do you think the market would have to rotate sectors and look for newer leaders?
I think market will have to rotate and look for newer leaders. So purely from a commodity sense, somewhere down the line, we find it very difficult to believe that from a price action perspective, in the underlying commodity can continue to sustain and go up significantly over the, let's say, the next 12 months period. Because the damage that it would do to economies, especially, the consumption economy, for example, in India, or the inflationary tendencies it can create, I think are very difficult to digest for most of the EMs. So in that construct, it was probably pertinent to take a viewpoint where the market, somewhere down the line has to start looking at, players which basically would benefit from peaking of these commodity prices and start to actually see an ability to bring up margins. So that's a usual way in which things should shape up over the next 12 to 18 months. The different thing that when we look at the relative or an absolute context as well, I think the opportunities still become very limited because wherever there's a potential for rotation, it happens very quickly, right? So it's a question of a weeks where you actually see a laggard sector, seeing return. So that's the challenge that most investors would face as to how quickly they can react to these changes.
Okay. There's another space that I do want to talk to you about, which is the rising electric